If your retirement portfolio were a garage, what would be parked in it? Today I'm going to walk through 4 vehicles that could be part of a Bitcoin-backed retirement, and I'll explain why picking the right vehicle or vehicles might be the most important decision you make. Each of these cars represents a different investment asset, and just like the cars, each of these has a different level of performance, a different level of stability, and requires a different level of volatility tolerance to handle. This framework is inspired by Michael Saylor's keynote at StrategyWorld 2026. In his keynote, he laid out 3 categories: digital capital, or Bitcoin, digital credit, STRC, STRC, and digital equity, or MSTR. Today I'm going to illustrate these categories with a car analogy. I hope you don't find it to be a stretch. This video is for educational and entertainment purposes only. This is not financial advice. But by the end of this video, you should have a starting point to consider which, if any, of these vehicles belong in your garage. I'm Michael, and this is b-tirement. First up is the orange Porsche 911. This one represents Bitcoin held in self-custody. The 911 has been in production since 1963. That's over 60 years of continuous refinement. It's one of the most proven performance platforms in automotive history. And Bitcoin has been around 17 years, since 2009, and Bitcoin is the most proven digital asset in the world. The 911 does 0 to 60 in about 3.9 seconds. That's exceptionally fast, but the rear engine layout demands respect. Especially in wet or slippery conditions, this car requires real driving skill. And here's the thing, you don't take a 911 out in a snowstorm. When weather turns bad, a smart owner just waits it out. They don't sell the car because it's snowy, they wait for the roads to clear. And it's the same with Bitcoin when a bear market hits, and they periodically do. Bitcoin can fall as much as 50, 60, or 70%. That kind of volatility requires real conviction. Many people sell at the lows at the worst possible time, but the ones that can hold through those storms over the long term are rewarded. The most important thing about this orange 911 is you own it. It's not a rental, it's not a lease, and nobody can repossess it. That's exactly what's important about Bitcoin in self-custody. Your keys, your coins. No counterparty, no custodian, no permission needed. Bitcoin in self-custody is the most sovereign asset in this lineup. And that brings us to the second car in the garage, the silver 911. Same engine, same 0 to 60 time, and the same performance. But this one, it's leased. You get all the performance, you get all the thrill, but the leasing company owns the title. If they go out of business or they change the terms, your access to this silver 911 could be affected. That's IBIT, the iShares Bitcoin Trust by BlackRock. It launched in January of 2024 and quickly became the fastest ETF to reach $50 billion in assets under management in history. IBIT tracks Bitcoin's price directly, so you have the same performance. But BlackRock has custodians that hold the Bitcoin. You own shares in the trust. You don't directly own Bitcoin. And there's an ongoing lease payment. IBIT has a 0.25% annual expense ratio. So why would anybody lease instead of own? It really comes down to accessibility. You can buy IBIT in any brokerage or IRA account. It's just like buying a stock. There's no hardware wallets, there's no seed phrase, and there's no need to set up a new account at a Bitcoin exchange like Strike or River. For many people, the silver 911 is an easier on-ramp. Now let's look at the vehicle that's suited for the largest portion of the population, the Tesla Model Y. The Model Y has become the best-selling vehicle on the planet, and nearly everyone has a use case for the Model Y. Commuters, families, city dwellers. It's one of the most innovative vehicles on the road today. And while it might just look like a practical crossover SUV, it's deceptively quick. The Model Y does 0 to 60 in 4.8 seconds. Compare that to the Honda CR-V's 8 seconds or the Toyota RAV4's 8.3 seconds. The Model Y is nearly twice as quick as its peers. But here's what really sets it apart: all-wheel drive. When it rains or snows, you don't park your Model Y, you just keep on driving. That's STRC, or STRC, Strategy's preferred stock. STRC trades right around its $100 per share par value, and it yields an annualized 11.5%. And those dividends are paid monthly in cash. And now let's compare STRC to its peers. U.S. Treasuries yield about 4%, and money market funds yield 3.4%. Stretch delivers between 2.5 and 3 times more than those so-called safe assets. And just like how the Model Y stays stable in all conditions, STRC is currently trading right at its $100 par value, even though Bitcoin is down over 40% from recent highs. And it has kept paying its monthly dividends even through the storm. The ability of Stretch to continue paying its dividends is contingent on Strategy properly managing its cash and Bitcoin reserves. For a lot of people that are looking for strong and stable Bitcoin-backed income, Stretch is the vehicle. And finally, the red Ferrari. 0 to 60 in 2.8 seconds, 818 horsepower. This car can be dramatically faster than anything else in the garage. But a Ferrari demands respect. At those speeds, the margin for error is razor thin. An inexperienced or nervous driver behind the wheel is a liability. And absolutely no one takes a Ferrari out in a storm. When the weather turns bad, it sits, and the driver waits. Period. That's MSTR, Strategy's common stock. MSTR is amplified Bitcoin exposure. Strategy holds a massive Bitcoin treasury, and MSTR's moves are typically between 1.5 and 1.8 as much as Bitcoin's moves. When Bitcoin surges, MSTR surges more, but when Bitcoin drops, MSTR drops harder. Look at MSTR's 52-week range. It has a low of $104 per share and a high of $457. That's a 4.4x swing in a single year. It's not for the faint of heart. To hold MSTR for the long term, you need to understand Bitcoin cycles, you need to understand the mechanics of amplification, and you need to have a stomach for extreme drawdowns. When conditions are right, nothing in the garage is faster, but extended bear markets test even the most experienced investors. Every great garage has the right mix of vehicles for that owner's objectives and lifestyle. For me, I've chosen to own each of these 4 vehicles in my garage. Let's recap, including the risks associated with each of these 4 vehicles. Let's start with the orange 911 that represents Bitcoin in self-custody. With Bitcoin, you're taking on the risk that it continues to survive and grow in adoption. The silver 911, or IBIT, you get the same performance as Bitcoin in a format that's more accessible. But with IBIT, you add custody risk. You're trusting that the custodians that hold the Bitcoin are securing it properly. And now the Model Y, or STRC, that pays a stable, all-weather yield of 11.5%. With Stretch, you add on execution risk. You're trusting that Strategy is able to manage their treasuries and manage their business such that they can continue to pay the dividends and maintain the par value of STRC. And finally, the Ferrari, or MSTR. This is amplified Bitcoin for those investors that have the volatility tolerance to handle it. With MSTR, you're adding thesis risk, that Strategy's amplification thesis will result in MSTR outperforming Bitcoin over the long term. These aren't competing assets, they're complementary layers. Michael Saylor's framework shows how digital capital, Bitcoin or IBIT, digital credit, STRC, and digital equity, MSTR, each plays a different role. Your job is to do your research and match these vehicles to your investment objectives and risk tolerance. Do you have any of these vehicles in your garage? Share in the comments below. And if you want to go deeper into this framework, I'll put a link to Michael Saylor's StrategyWorld 2026 keynote in the description below. I'm Michael, this is b-tirement. If you like this video, hit subscribe. I'm putting out similar content every single week.